Um, the requirement, yeah, it's just 5 point, can you go down a bit?
What
Yeah,
page?
it's 5.5 and 5.6.
Is that the activities?
No, that's the specific inclusion, I think.
Oh, okay, the theory.
Yeah.
Okay, so yeah, so a specific inclusion is something that must be included in the actual gross income of an individual. Because remember, gross income has a very specific definition.
Okay.
As long as you are earning an amount, doesn't matter what the amount is, it could be dividends, fringe benefits, anything, services rendered, it's all going to be part of your gross income. So what the Income Tax Act provides for an individual, even a company, it also applies to a company as well, is that anything that the company is earning, it doesn't matter what the source is. It could be dividends, fringe benefits, it could be anything. But as long as the individual is entitled to that benefit, it needs to be included as a specific inclusion. So it might not meet the definition of gross income as such, but the Income Tax Act provides for certain things to be specifically included, meaning you have to include it. For example, a dividend. Okay, we know that there is an exemption that applies to dividends, but even though there's an exemption, SARS still requires you to include the amount and then you show the exempt amount. So when you look at the gross income calculation, gross income is the top bit. Okay, remember we looked at format last time. We had this thing. Okay,
Yes,
gross
yes,
income, less deductions and all of that. Okay, so under this heading, gross income, you can have things like dividends. You can have things like fringe benefits. You can have all sorts of, inverted commas, income other than a salary or a wage. Okay, so even something like a taxable gain. Right, when we look at CGT, something like a taxable gain would also be something that you would have to specifically include. Okay, it's actually brought into the actual calculation as a separate consideration. So that would be something that we would see later. Okay, the capital gains tax. Right, when you have a gain, it would be considered as like a form of income, something that you've received.
Okay.
Okay, so specific inclusions just means things that have to be specifically included.
Oh, okay.
Okay, and then obviously exempt income, then you would less exempt income bracket in line with the rules. Okay, so then exempt income isn't a separate line item, it's part of the gross income. So when you look at each of these, if I look at dividends, then there could be an exemption. If I look at something like interest, okay, that also has an exemption. Okay, but the exemption is looked at separately from the gross income. It's looked at on an individual basis, depending on what you're focusing on. So if I'm focusing on dividends, then I'll apply the specific exemption to dividends. If I have interest, then I'll apply the specific exemption for interest, and so on and so on.
Okay.
Okay, so that's what the theory says. Right, so when looking at the actual study guide, they mention here that gross income has a very specific definition. Okay, that's theory, and they talk about amounts that are either received or accrued to. Okay, so you don't have to actually receive it. As long as you're entitled to it, it'll still be seen as income. Okay, it has to be included in your gross income. Right, then you'll have other things that must also be included. So no matter what the nature of income is, there are specific amounts that are also included. Things like dividends, fringe benefits, and so on.
Okay.
Okay, and those are just extra things that we have to include. And there's a lot. There's anything that you would view as being a benefit, as a receipt, would be included as something that you need to include as part of your taxable income calculation. Okay, because your taxable income calculation would be affected by gross income amounts. So the more income I put in gross income, it would obviously increase my taxable income.
Yes.
Okay, and then obviously exempt income is those exemptions that apply to specific line items in gross income. So
Okay.
dividends will be included as a specific inclusion in gross income, but then there'll be a special exemption for it, which makes it exempt income. Okay, it's just different classifications for income that you need to disclose to SARS. Because remember, even though you don't pay any additional taxes on your dividends other than the withholding tax on dividends, you aren't going to pay more income tax on dividends because it already has been taxed. That's why it's viewed as exempt income.
Okay.
Okay, because dividends has other taxes. Maybe let's just write that in. Where's my other, my notes? Okay, so dividends, asterisk, there is, they call it a withholding tax on dividends. Okay, and this is separate tax that you pay on your dividends. Okay, so if a company pays out a dividend, you're actually taxed on that, but the company actually collects the taxes before they pay you the dividends. So you get what's after the taxes that you've paid. And that's why SARS will view dividend income as
exempt.
a form of exempt income because you've already paid taxes on it.
But dividends from like foreign, isn't that not exempt?
Yes, for foreign, yes. So if you have dividends in or from South African companies, then that exemption applies. See, the exemptions are very specific. Okay, so South African companies paying a dividend, those dividends are exempt.
Okay,
you're right. Okay, obviously foreign, not exempt. Okay, here's it here. Foreign dividends distributed by a company. Have a look.
Okay.
Foreign dividends received amount to 5,000. Taxable income calculation, gross income 5,000, exemption 5,000. Taxable portion 0. Okay, this is foreign dividends, and South African dividends also qualify for an exemption. The following is a summary of how dividends and South African dividends, which was received by or has accrued to the taxpayer, is treated. Okay, so you said foreign dividends. It's actually foreign interests.
Oh, okay.
Yeah, it was the interest one that we looked at last week.
Yes, yeah.
Okay, it used to be the foreign dividends, but I see they've changed it. So legislation, foreign dividends distributed by the company listed on the JSE.
So it's exempt.
Exempt.
Yeah, I thought it was.
Do you see that?
Okay,
there. See, exempt. Even this one. Foreign dividends received from a foreign company in which the individual holds at least 10%, also exempt. Okay. Here, other foreign dividends. So other, meaning, so not JSE companies. You see, even though it's a foreign dividend, it was still listed by a company in the JSE. So, in other words, it's still kind of like local, if that makes sense.
Yeah, okay.
Okay, so because it's listed on the JSE, so it's a foreign company. Okay, foreign dividends distributed by a company listed on the JSE. So where is the company listed? It's still in South Africa.
South Africa, yeah.
Yes. Okay, same thing here. Foreign dividends received from a foreign company, which the individual holds at least 10% of the total equity shares and voting rights. Okay, so if the individual holds more than 10%, then that's a lot in terms of one individual holding a percentage of the voting rights and shares, then they would also receive an exemption for it. But if it's other, okay, foreign dividends received amount to 5,000, taxable income 5,000, but the exemption here is going to be in that ratio, 26/41. That's the exempt portion. So SARS will give you a piece, but they won't give you all of it as an exemption.
Okay, but for the 10% one, is that foreign dividends in South Africa, or is it outside of South Africa?
It's foreign dividends received from a foreign company. So the foreign dividends are received from a foreign company. So you've got a foreign company that's paying a dividend to South African individual, but that individual owns more than 10% of that company.
Okay.
So that's like you owning, let's just say you owned, if you owned, let's say, more than 10% or 10% or more of, let's say, Facebook.
Okay.
Okay, Facebook is a foreign company, but if you owned 10% or more in Facebook, the foreign dividends that Facebook would pay out would be exempt.
Okay.
Okay, so whatever dividends you receive from Facebook, okay, as long as it's a foreign company paying a foreign dividend, if you hold more than 10% of the voting rights and the equity, then you would receive an exemption.
Okay. I just wanted some clarity on that. Okay, yeah. Thanks.
Okay. All right, and then the other foreign dividends is from anywhere else. So now this is getting dividends from any other company that's not listed on the exchange, and a company that we don't own a lot of equity in.
Okay.
So any other scenario, not one of these two.
Okay,
so if it's any other scenario other than scenario 1 and 2, then we apply this 26/41 rule.
Okay.
Right, they did have a note here. If the question states that taxable portion of foreign dividends, that amount should be included in the final taxable income. Okay, that's obviously something to consider. Okay, we know local dividends are fully exempt. That's easy. Okay, that hasn't changed. That has always been the case.
Okay.
Right, and then they've just asked you to refer to some of the textbook examples, and what else is given here. Here's an example. Let's look at this one. Carl. Right, so if we're looking at Carl, remember we need to check if Carl fits into any of those categories. Okay, so Carl receives African interest. Okay, this is SA interest.
Okay, so it's exempt.
It would be exempt, but only to a specific limit.
Yeah, what is it, like 21 or 18?
Yeah, we're going to go to the tax guide. Let's go find the interest stuff. Where is it? There, exempt. Okay, so on this page of the tax booklet, there, South African source interest received by natural persons. Persons under the age of 65, persons over the age of 65. Okay, then you would apply this to the scenario. Okay, so let's read the question again.
This is given to you in the exam, isn't it?
It should be, yeah. The tax. You just need to refer to those past papers. That's why I want to try do some of those past papers with you later on. Once we've covered all the theory, once you're happy with what's in the study guide, then we can look at answering questions. Okay, they should give you information in the actual exam paper, looking at certain things. Some exemptions or things, some rebates and things like that you are going to have to know off by heart, but some of it they will give you. We just need to check what do they give you in the past papers. Okay. Right, so coming back to Carl. Okay, Carl received SA interest and South African dividends. Okay, we know if it's South African dividends, will there be an exemption for it?
Yes.
Yes, okay, so you will always be able to claim an exemption against African dividends, as long as it's South African dividends.
Yeah.
Okay, we've got two people here though. Okay, we've got him and his wife. Okay, so his wife earns 9,000 and he earns, well, in example A, Carl is 40, earns interest of 11,500 and is married out of community of property. If he's married out of community of property, what's his is his, what's his wife is his wife's. It's separate, it's totally separate.
Yeah.
Okay, so if it's separate, he would receive an exemption of 23,800. Is he under the age of 65? Yes, he is. So would he pay any tax on his interest? No, he wouldn't. He'd get an exemption of 11,500, okay, and you would get an exemption of 5,000. Does that make sense?
Yes.
Okay, that's what they should have given you here, do they? Yeah, it's fine. It's the same here. See, 5 and 11. Okay. If he's older than 65, so if he's 66 years old, then we apply this. 34,500 is what you're allowed to exempt.
Okay.
As long as you're over 65. So, here, he's older than 65. He earned more than 34,500. So, his exemption would be limited to 36,000.
34.
Okay, so now what would you show in your books? Let me show you what he would show in his books. If I was doing Carl's gross income calculation, okay, I would show this. Dividends, you would show SA dividends. SA dividends brackets 5,000, and then you would say less 5,000 exemption. Okay, and then you would show null here. Right, then you would show interest. Interest 36,000. Okay, limited to an exemption of, go back to that page.
34,500.
Yes, 34,500 here, older than 65. Then I would write that down in my working. Okay, exemption of 34,500 brackets older than 65 years old. Okay, so what would you do? I would show 36,000 minus 34,500 equals, and then I would show that as part of his gross income, minus 34,500. Okay, so you would show dividends of that, okay, which are exempt, and you would show interest at 1,500. Okay, so you show it, but then you minus the exemption. Okay, another way of laying it out, you could show it like this.
Why do you minus the exemption?
Yeah, the exemption is what he gets as a benefit. Okay, you could show it like this, 36,000, and then you could say less interest exemption over 65.
Oh, okay.
Okay, you could show it like this if you wanted to. Doesn't matter. Okay, either or would be acceptable. Right, so you can either show all of it here and then show the exemption, or you can do it like this, where I did the working and then just showed what's left. Okay, the net effect is still the same. He's going to have to pay tax on 1,500 according to his income tax tables.
Oh, okay.
Does that make sense?
Yes, it does. I was just getting confused because I thought the exemption means the amount couldn't go past 36.
No, the exemption means he's allowed to deduct, or inverted commas deduct an amount from his income. See, like what I'm doing here. See, I'm showing income, but I'm exempting 34,500, meaning I'm not going to have to pay tax on it.
Okay.
Okay, so I can either show it like this as a separate working, or show it like this where I show the full amount and then I show the exemption that he receives.
Okay.
Okay, it shouldn't matter. You should mark either or right, as long as you're applying the correct rules.
Okay.
Is that alright?
Yes, it is. Thank you.
Okay, so that covered that one. Let's just look at the last one. Carl is 40, earns interest of that, and is married in community of property. Notice though, he's married in community of property. So if they're married in community of property, half is the wife, half is the husband.
Yeah.
Okay, it's half, it's split.
Yeah.
Right, so must Carl include his wife's interest? Yes, he must.
Half of it.
Well, you have to add his interest plus her interest, and then you get the total interest. Okay, let me show you what I mean. Okay, so dividends, if Carl is married in COP, community of property, okay, then he shows half of everything that him and his wife earn. Okay, so obviously Carl still gets his own dividends, so his own dividends would be part of his taxable income, but only half of his dividends. Okay, so maybe just to put a note here, NB. When COP applies, everything is halved between husband and wife. Okay, so how much dividends did he earn? 5,000. Remember, half of that is his, and the other half is also his wife's.
Okay.
Okay, so the dividend that he's going to show here is going to be 5,000 divided by 2 less a 2,500 exemption. Okay, bracket local dividends. Okay, so he's going to show 0 still, but he's only going to show 2,500 as income, and then
Well,
an exemption of 2,500.
the exemption for South African dividends, what is it again?
There's no limit. It's unlimited as long as it's South African companies.
Oh, okay.
Okay, so there's no limit to it. You can earn R1,000,000 in South African dividends, as long as it's from South African companies and it meets all the rules. The 1,000,000 will be exempt.
Okay, thank you.
Right, and then interest. His interest and her interest needs to be added. Okay, so Carl receives that amount, 11,500, and his wife receives 9,000. So here under interest, we're going to show 11,500 plus 9,000. Okay, that gives you the total. This is the total split into 2. Total split or divided by 2, because married in COP. Okay, so whatever is his and hers, it's combined, and you need to divide by 2. So here you would have brackets 11,500 plus 9,000. Okay, divide by 2 gives you 10,250, which he would include. He is under the age of 65 in this example. He's 40 years old. Okay, so if he's 40 years old, he only would receive 23,800.
800, yeah.
Yeah, so less interest exemption, limited to 23,800. So he would only be allowed to deduct that amount, negative 10,000. See, you don't get the full exemption. The exemption is available to be used.
Okay.
Okay, if he doesn't earn the full amount, he doesn't claim the full amount. Right, here, as a husband and wife, he only earned half of it, so 10,250. Notice you don't claim 23,800. You only claim the exemption against the interest that was included.
Okay.
So this is included, but here it is now exempt. Does that make sense?
Yeah, it does.
Okay, that's how it works. That's how dividends and income work for individuals.
Okay.
Right, let's carry on. Let's see what else they gave in this. Oh, that was it. Yeah, that's the end of the chapter. Did you look at the rest of these questions in the at the back?
Yes, I did.
Okay,
I
which
did.
ones did you struggle with?
What? This is learning unit 5, isn't it?
Yeah, this is 5.
I did 5.1, 5.2, 5.3.
How did they go though? Were they easy, difficult? Did you struggle? Did you understand everything?
5.1 was easy. 5.2 was easy. 5.3, I did do it, and it seemed fine to me. Yeah.
Okay. Do you want me to go through any of them? Are you happy with all of them?
Yeah, I think I'm fine with them.
Okay. All right. So if you're happy with those examples, I know we went through, what was it, 5.4 last week, I think.
Yes. Yeah.
So
I was
we
stuck.
already covered one of these question 5 examples. Okay. So that was when we spoke about what is it? It was the pension stuff. Yeah, we spoke about pension and we spoke about donations and all of that.
Yeah.
Okay. How was the last one? Was there more here? 5.4, 5.5. Was 5.5 right?
We did 5.5, I think.
No, I don't remember doing 5.5.
Oh no, that was my question. I was gonna ask you.
Okay.
We were supposed to go through these two.
Oh, okay. So we can do this one now then.
Yeah. 5.4 and 5.5. Oh, let's just do 5.5.
Yeah, 5.4 we did last week. That I remember.
Okay.
Okay, 5.5. Yeah, we haven't looked at 5.5 as far as I can remember. Let's check that. Last week's notes. Okay, I did email this to you. Yeah, we only did 5.4. See, there's it. Okay, so let's do 5.5 here. Okay, let's just put in heading. Okay, this is 5.5. What page is that on? Let's check. 5.5 is on page 17. Okay, here's the question. 25 marks 30 minutes. Okay, so format is very important. I'm literally going to copy paste my format from before. Okay, just this bit, the intro stuff. Okay, so that doesn't change. You'll have gross income, and then you'll have possible deductions and allowances, and then you want taxable income. Okay, so that doesn't change. You have gross income, deductions, allowances, taxable income. Okay, so let's go to the question. Maybe let me shrink this. Okay. Right, so the first bit. Lucy is 38. She's married out of community of property to Jan and has 2 children, 5 and 8. She had the following income and expenses for the year. Right, income. Would you include income as part of her gross income?
Yes.
Yes, so she gets a salary. Brackets, 240,000. She also gets a bonus, 20,000. All of this is part of her gross income. South African interest, is that part of gross income? Definitely.
Yes. Yeah.
Okay, but when you see South African interest, then you need to say less the interest exemption. Okay, so what is her interest? Open brackets. How much does she receive? 30,000. Okay. Less an exemption of let's see, it was 23,800. Yeah, she's under 65, so she gets 23,800.
Okay.
Okay, less exemption of 23,800 available. Would she make use of the exemption? Yes, she would. Okay, so we can show her interest. We can show 30,000, and then we can show the minus the 23,800. See that?
Yeah.
Okay. What else? Foreign interest received from a foreign company. Okay, this is foreign interest received. Okay, so if it's foreign interest received, and this was from a foreign company. If it's a foreign company, then what must you do?
Isn't they exempt? No.
No, it's foreign interest. Remember, only the dividends may have an exemption. Remember?
Yeah.
Okay, so because this is foreign interest, you're going to have to put all of it in. 7,000.
Okay.
Okay, because it's interest. Right, remember the foreign dividends only apply, the dividends apply to this table. Okay, then you go back and then you look at this thing. Where is it? This table. Okay, the foreign dividends table. Okay, remember, listed in South Africa, or more than 10% voting rights or ownership. Other foreign dividends, portion of 26/41. Okay, so let's go back. Let's see what else she gets. Okay, so I've got the interest. I need the dividends now. Okay, now we can put foreign dividends. Foreign dividends received from a foreign company listed on the JSE. See, there's the NB. Okay, listed on the JSE.
So it's fully exempt.
It's fully exempt, yes. Fully exempt. Okay, because of the rule. Right, so you would show 5,800, and then you would show the foreign dividends exemption, and then you would show minus 5,800 there.
Yeah.
Okay. Right, then you've got expenses. Contribution to retirement annuity. Okay, do you remember your rules from last week with the RA? Remember RA, pension, all of that needs to follow the 27% rule, right?
Yeah.
Okay, so we need to look at, well, how much did she actually contribute? Contributions to retirement annuity fund, well, that's given. So RA fund, 3,600. That's what she contributed, right?
Yeah.
Okay, she also made contributions to medical aid. They say see the note. And then she made a donation. And then she also made contributions to a pension. Okay, so she also made a donation to the pension. Right, so if she's contributing this amount to her RA, okay, it's a retirement annuity. So if it's a retirement annuity, that was her contributions to a fund. Was this daily or monthly? Does it say?
No.
Let's see. Okay, medical aid, that's separate. Lucy donated. Oh, and then there's a pension. Okay, that's different. That's separate. That's point number 3. Okay, so you've got her RA. You still need her pension as well because we're looking at retirement funds. Okay, remember that 27% only apply to pension, provident, and RAs. Okay, so pension. Point number 3 said Lucy contributed 8% of her salary. Okay, so her salary was what? 240 times 8% gives you how much she contributed. How much does she contribute? Let's check. Times 0.08. Okay, that's 19,200. Okay, so 19,200 went to a pension and 3,600 went to her retirement annuity. Okay, we need to know how much is she actually allowed to claim. Okay, remember last week we spoke about the remuneration, right?
Yes.
Okay, so we need to discuss that again. Remuneration. Okay, is her salary part of remuneration?
Yes.
Yes, it is. Is her bonus part of remuneration?
Yeah.
Yes, it is. Okay, is her SA interest part of her remuneration? No.
No.
Foreign interest and dividends? No.
No.
Okay, so her remuneration is just those two amounts. Okay, so total remuneration equals 240 plus 20. Okay, so total remuneration is 260,000. Do you agree?
Yes, it is.
Okay, we also need to compare that to a taxable income. Remember, that's what we did last week. Okay, compare taxable income. So what would a taxable income be? Well, her taxable income would be that. Her salary, that didn't change, and her bonus. Alright, so her taxable income would be the sum of all of that. Okay, which is 200 and, minus the exemptions. We don't take the exemptions into consideration. Okay, get rid of the exemptions. Okay, let me do this better. Equals. Okay, so salary is what she earned, plus the bonus, plus the interest, plus the tax, plus the dividends. Okay, that was the total. She had interest deduction of that. Her interest was received, and then the foreign dividends was received. Okay, so if I minus her taxable income, less allowable exempt income. Okay, how much of her income is exempt? Well, it would be this amount, yeah, so this and that. Okay, 29,000. Okay, so if I'm looking at, let's think, her exempt income, because that's her taxable income. Taxable means her deduction, what she would be required to pay. But you see, that's not taking those other things into consideration. I'm not taking the donation, I'm not taking the medical aid into consideration. So actually, you need to do more first before you can work this out.
Okay.
Okay, because I've got this taxable amount and I've got exempt income, but then I'm not subtracting her other stuff. She still has medical, less medical. I'm not minusing medical, so I need to work out the medical. Okay, question mark. And what else did she have? She had a donation. Okay, so the donation would be limited to, it would be the 10%. Was it 10%? Yeah, I think it was 10%.
Yeah, it was 10%.
Yeah, we'll check it again just now, 10%. Okay, so we still need to minus her medical, and then her donation would be her taxable income calculation. How much would she actually contribute to the Section 18A certificate charity? Okay, so let's see if I'm looking at gross income, salary, bonus, that's fine, that's remuneration. Okay, so let's start by looking at limited to, so deduction, limited to 27.5% of what was her remuneration? 260,000. Remuneration. Okay, what does that give us? Let's see. 260, which is this, times 0.275 gives me 71,500. Okay, that is an amount, okay, that represents the deduction against her remuneration. Okay, we still need to now look at the taxable income. Okay, so obviously taxable income deduction limited to 27.5% of taxable income. Okay, and that's where I need to get that amount, 27.5% times. Okay, so we need the medical. Okay, where's the medical? Here's the medical. Contributions to a medical aid fund. Lucy contributed 400 per month. Okay, so go back to the deductions. Wrong page. That page. Okay, so medical aid contributions. Okay, the medical aid contributions were 400 Rand per month for the full tax year, and her employer contributed 2,100 per month for the full tax year. Okay, so Lucy contributed, and so did her employer. Okay, if her employer is contributing to a medical aid, what is that viewed as?
Benefits?
Yeah, it's a benefit. Okay, if your employer is paying you a portion of your medical aid, that's a form of a receipt, right?
Yeah.
Okay, so that needs to go here. Okay, special inclusion. Bracket, medical paid by the employer. It's a fringe benefit. Okay, so how much does the employer actually pay? Well, we read it, 2,100 times 12. So in the year, the employer pays times 12. The employer pays 25,000. Okay, 200. Right, so if they're paying 25,200, is that going to add or subtract from their taxable income?
I don't know.
It's going to add. That's a benefit. Okay, so now we can put that in. Taxable income, 25,000. 25,000. Do you see that?
Okay.
Because that's an amount that is payable. Right, so that's a fringe benefit. Right, so there's the 25,000. Okay, remember we had to look at the medical in order to get the taxable income. Okay, so how much does she actually have here? Let's check. Equals the sum of all of her income. Okay, all of her income would be that. Okay, is that income taxable?
Which one?
This income equals the sum. All of that, all the yellow.
Yes, it is.
It is taxable. Why is it taxable?
Because it's a gross income.
It's part of gross income, exactly, yeah. Okay, so her 2,100 times 12, okay, this 25,200 is going to be taxable. Okay, meaning they're going to be able to, she'll have to be able to pay taxes on it.
Yeah.
Okay, alright, so what are we going to get? Well, we've got 25,200 there, 25,200 there. That gives you the taxable income of 2,984. That's what's specifically included. Okay, so we were busy working out the taxable income. So down here. Okay, so what I didn't have, now I can sum this up. Let me make this blue. Okay, that amount is going to affect that. Okay, so her deduction is going to be limited to 27.5% of 298,400. Okay, how much is that? Let's check. $298,400 gives me 82,060. Okay, so that means in terms of her pension, okay, she would be able to claim this as a deduction. Okay, bracket limited, obviously. Right, so how much is she contributing?
3,600.
36 plus?
Oh, 19,200.
Can she claim that?
No.
Yes, she can.
Yes.
She can
Yes,
claim
yes,
it
yes.
up until this amount.
Till 82,000.
Yes, that's what she can
Okay.
claim up till. So she's contributing well below that, do you agree?
Yeah.
Okay, so her RA fund will be deductible. So RA deduction and pension deduction. Okay, the RA deduction would be equal to minus that 36, and the pension would equal minus that 19,200. Okay, that can be deducted up until a limit of 82,060 rand.
60, yeah.
Yeah, that's how much she can deduct as a maximum. Okay, what she's limited by.
Okay.
Okay. Alright, what else did we have in the question? Okay, the question gave us more information about the family, right? It said she also had other qualifying medical expenses, right? That was 13,200. Then she also says her husband and 2 children are dependents on her medical aid. None of them has a disability. Okay, so that would have been a medical deduction. Do you agree?
Yeah.
Okay, so we need to determine how much is she allowed as a medical deduction. Well, if I'm looking at her family, she's got husband and wife, obviously, and she's got 2 kids.
Yeah.
Okay, so qualifying medical expenses need to follow that rule that we saw last week.
Yeah, it was
where
like,
was that? Let's go find that again.
it was 292 for the main dependent, 292 for an additional dependent, and like 190 something for the kids.
Yeah, it was somewhere around those figures. Let's just put it up so we can see all of that. Medical aid contributions. We're looking for the deductions. The deductions. No, not there. Fringe benefits. What page was it on? I'm not seeing it now. Okay, I think I've gone too far. Start from the beginning. Let's look at the index actually. Okay, so we're looking at medical aid tax credits, page 5. There's it. Page 4, page 5. There we go. Okay, here's at the bottom. Okay, medical aid tax credits. Right, monthly amounts deductible from tax payable. Okay, main member, member with 1 dependent, member with 2 dependents. Okay, so we know she's already getting a benefit from the medical aid. Do you agree?
Yeah.
Okay, we need to know how much is she allowed as a deduction. Well, we're looking at her tax credits, right? So her tax credits will be in line with the number of family members she has in her family. Okay, so coming back here, we had husband and 2 children. Okay, we still need to show the donation, which is note number 2. How much did she donate? 27,000 to UNISA and received a Section 18A certificate. Right, so medical aid contributions, this will be C tax credits. Okay, you will have a donation here. Right, and the donation was how much? 27, yeah. Okay, this 27,000 is the amount that she donated. Okay, we need to limit this, limited to, it was 10% of the income. Okay, taxable income. Okay, so let's see how much does she actually have at the end of that point. So now we can say less here, less deductions. Okay, the deductions were those two amounts. Okay, 22,800 was the amount that she was able to deduct. Okay, so if I'm working out the net amount, okay, the net amount before donations, I had this total minus that gives me 275,600, which was the net amount before you had any donations.
Okay, so it's 10% of that.
Yeah, it would be limited to 10% of that.
Okay.
Limited
So it's
to
exempt then.
10% of 275,600. Okay, so can she claim the 27,000 that she donated?
Yes.
Yes, because it's less than the threshold. Does that make sense?
Yeah.
Okay, so you'd have the deduction here of minus 27,000 for her donation.
Yeah.
Okay, then we've got the taxable income, which we can now actually calculate because we just have the medical left to do. Right, so literally sum up all of this stuff and subtract. And I get 248,600. Okay, that's your taxable income. Right, then you'd have to calculate tax on this. Okay, we require those tax tables. For an individual, there, individual 2017, how much tax is she going to pay? Which category does she fall in?
No, the third.
The third one.
What is it, the amount? What was the amount?
248,600.
Oh, the second one, yeah.
Yeah, she falls in the second bracket, right? This one here.
Yeah.
Okay, so let's copy that. She falls into that bracket. Okay, so tax equals 18001. Okay. No, not 181. That's the range. 33840. Okay, plus open brackets 26% of the amount exceeding 1880. So 248,600 minus 1880. Work that out. Gives you that tax. Okay, so she or he is going to have to pay 49,596 over to SARS.
Yeah.
Okay, but they still need to less the tax credits. So medical credits. Right, and the medical credits will be how many kids? 2, right?
Yeah, 2.
And mother and father. So the mother gets how much?
792.
The mother gets 286 and 572. See
Yeah.
that? Monthly deductible amounts. Okay, so the main member. Let's go back. Okay, so as a main member, 4 members times. We're looking at the tax credit. So, what was it? Main member with 2 dependents. She's actually got more than 1 dependent. Okay, this one's not so great. We need that other page.
Yeah, there was a different one.
Pardon?
There was a different one that explained it better.
Yeah, here's it. There we go. That's the one. This is the better page.
Yeah.
Okay, 182 per month for each taxpayer and the first dependent, and 192 for the individual dependent. Yeah, those are the right ones that we look at, because these are the contributions.
Yeah, yeah.
Okay, so if we look at the contribution, we've got 286. Okay, so 4 members times brackets. Actually, let's do it this way, because you've got kids. Oh, well, it actually would be fine then, because we've got kids. So we can just say for each of the taxpayer and the first dependent. So you'd have 2 times 286 times 12 plus
192
2
times 2.
192 times 12. Okay, it gives you 11,472. That's her medical tax credit. Right, what else can she subtract? Well, her medical expenses. Other?
Isn't it limited to an amount?
It is. It was, I think it was 10%, wasn't it? Yes, there's it.
So that's for both the donations and that?
No, not the donations.
No, I'm saying donations.
The donations was 10%. This one is 7.5%.
Oh, okay.
You see it, and you have to times it by 4 and all of that. Okay, so I need to copy this down here. Okay, so going back to the question, what were her other qualifying expenses? 13,200. Okay, so 13,200 was the additional amount that she had contributed. Do you agree?
Yeah.
Okay, and that needs to be medical aid contributions minus 4 times the medical scheme's fees tax credit plus other qualifying expenses exceeding 7.5% of taxable income. Okay, so I need my taxable income amount here. Where was it? We had it earlier. There's it. Okay, so other medical expenses, deductible, but limited to 7.5% of, what was our figure? The yellow. 248600. Right, so what is that limitation? Let's double check. 7.5%, 0.75, 0.75 times 248600 gives me 18,645. Okay, that's how much she can possibly claim. This is the limit claimable. How much does she contribute?
400 per month.
11,000.
Yeah, yeah.
Okay, 11,000 was her contribution, and her other medical expenses was 13,000.
Okay.
Okay, so if she's contributing that amount, okay, that was her That was her medical aid credit. Oh, where's the contributions? I didn't put contributions in. Oh, here's the contributions. Okay, how much does she contribute as part of her medical aid?
400 rand per month.
Yes. No, not 400 rand a month. 2,400. Oh, that was the employer. Sorry, you're right. Okay, 2,100 was the employer. 400 was what she contributed. That's right. Okay, so she contributed 400 rand a month. So her medical aid contributions, we need to add that here. Okay, the medical aid contributions were 4,800. Let me show the working. Okay, that's how much you contributed during the year.
Yeah.
4,000 times 12. Okay, it's 4,800. Right, the employer also contributed. How much did the employer contribute? Where was that? There, special inclusions. Okay, so how much did they contribute? To 25,200. Okay, it gives you a total of 30,000. Right, so total medical contributions amount to 30,000. Do you agree?
Yeah.
Okay, and then obviously we're minusing the other. Okay, well, we're including the other medical expenses, right? So how much were the other medical expenses?
13,200.
Yes, that's what we had there, 13,200. But that was limited to 7.5% of the total.
Taxable.
Taxable income, divided by a factor of 4, though. Okay, so if I'm looking at the medical contributions, which was 30,000, okay, we worked out the medical credit, which was 11,000. What is it? 11,000. Where is it? Yeah, here. 11,472. That was the medical aid tax credit. So that's the tax that she's paying, or going to have to pay. Okay? And if she's going to pay that amount of tax, we need to subtract her deductions. Right, so would she be able to claim her medical aid deductions?
Yes.
Would she be able to claim the medical aid deductions? The deductions?
Oh, no,
the contributions, in other words. That's what I mean by deductions.
No.
Why not?
Why? What do you mean, why not?
Because it must exceed 7.5%. Is it exceeding 7.5%?
Oh, no.
No, it's not. Okay, it's not exceeding 7.5%. Right, so would she be able to claim anything additional?
No.
No, she wouldn't. Okay, because it's limited to.
Yeah.
Right, so here you had her tax credit. That's going to come off her taxable income. Okay, that comes off her taxable income. And then her contributions of 30,000. Okay, obviously limited to. So we had, this was limited to that. So she can't claim the additional contribution. So she wouldn't be able to claim more. Okay, so the excess contributions and other qualifying medical expenses. Okay, the amount by which the formula, okay, medical aid contributions minus medical aid schemes plus other qualifying expenses exceeds 7.5% of taxable income. Does it exceed 7.5%? No, it doesn't exceed.
No.
Okay, because if we do this calculation, let's show this calculation. What are medical aid contributions? 30,000, right?
Yeah.
Okay, then we less her credits. What are her credits? 11,472. Right?
Yeah.
That was her the tax credit that she
tax credits that she
but times 4, multiplied by 4. Okay, because that's what the specific rule says. The rule says medical tax credits times 4. Okay, and then plus other medical expenses. Other medical was how much in this question? 12,300. Okay, and that gives you a total of how much? Let's check. 30,000 plus open brackets 11,472 times 4 close brackets plus 13,200. Okay, it gives you 89,088.
88, yeah.
Okay, so that would be her total. Okay, everything that she's contributing. Does that make sense?
Yeah.
Okay, so if she's contributing all of that, okay. Oh, hold on. I said less credit and I added it. That's not right. I had a plus there, not a minus. Minus 30,000 minus the 11,472 times 4. That's what I've done. And then plus the qualifying. So I've added the 13,200. Okay, what does that give me? Okay, it gives me negative. No, that can't be right. You can't get a negative. I've done something wrong here. Let's read it again. Medical aid contributions. How much did we say that was? That was 30,000. Yeah, it was her portion and the employer's. Okay, so that's fine. Then minus medical fees tax credit times 4. Okay, so medical fees tax credit times 4, which would be the 44,000. Okay, because you've got the 11,000 times 4. Okay, so that's fine. And then they said plus other qualifying medical expenses plus other. So plus other, which was 13,200, which is right. Okay, exceeds 7.5% of the taxable income divided by a factor of 4. Okay, so unless I've made a mistake here, 30,000 minus.
Try doing it maybe individually or something. Maybe it's not.
Plus. Okay, so it shouldn't be negative because remember it must be the amount that exceeds. Okay, so if it's negative, it won't exceed the taxable income. So this was the taxable income, right?
Yeah.
Yeah, limited to that. There's it there, 7.5% of that. Okay, so taxable income equals that, and that gives me how much? Okay, we worked it out earlier. There's it. That's the limits. Okay, so yeah, that makes sense. Okay, so this is so any contributions exceeding 18,645 will be allowed as another or more deductions. Okay, so that's something additional.
Okay.
You see that? Okay, so that's what they're saying here in the legislation. The legislation says excess contributions and other qualifying medical expenses may be claimed as an additional expense, a medical expense tax credit, calculated as follows. So anything exceeding. So do our contributions exceed it? No. These contributions are negative. Does not exceed the 18,645. Does that make sense?
Yeah.
Okay, so because it doesn't exceed the 18,465, we're not going to claim any additional medical.
Well, that piece of information you put there with that medical aid contributions, all that stuff there, would it be inside the exam?
I don't know. I need to check. Let's open up an exam paper and see. Okay, you've sent me a few.
I think it is. I think it is.
It should be, but let's just double check. Okay, here's 2016 exams. Okay, so here's October, November 2016. What do they actually give the students? Let's have a look.
It should be at the end of right at the end.
Yeah, it should be. Here's it. Okay, so they give you the tax tables.
Yeah.
They give you the fringe benefit stuff.
Yeah.
What else do they give? They give the employer-owned vehicles. They give the rebates, and they do give the medical tax credit. There's it.
Okay.
Anything else? They give you exemptions for interest, they give you that. They give you the capital gains, and they give you the deductions and business expenses. Yeah. And there's more. Employee contribution, they give that, and administration as well. Anything else? No, that's it. Yeah, so they do give it.
Okay.
Okay. Alright, so let's go back. Where were we? Oh, I lost my spot now. Okay, there we go. Oh, we need the question as well. Okay. Alright, so have we finished this question? Well, let's check. We've looked at the medical contributions, yes. We've worked out the tax, yes. Okay, so the net amount. So, net amount payable to SARS. Right, the net amount payable to SARS would be her tax. Okay, so tax was how much? Let's go back and get those figures. There's my tax. 49,596. We worked that out. Okay. How old was she or he? How old was this person? 38. Okay, so what rebate are we going to use? We're going to use the primary rebates.
Yeah, 13,500.
13.5.
I think so.
Persons under age 65 rebates 13.5 for 2017. Yes. Okay, so then you'd have less 13.5. Okay, and then we also claim medical tax credits, right? Our medical credits. Okay, and how much were our medical credits that we worked out earlier? There's our medical credits, the red. Okay, and then she had no other additional qualifying expenditure. Okay, so then her tax payable, her net tax payable would be the difference here between those amounts. This minus gives you that amount that she would have to pay.
Oh.
Okay, net tax payable. Right, so we just have to look at each of them separately. Okay, remember right at the end it's just to summarize. We need to summarize how much does she actually pay.
Yeah.
Okay. Does that complete that question? Let's check. What did they want here? Calculate Lucy's taxable income, which we did. Calculate the normal tax, which we did. Yeah, so that does complete that question.
Okay.
Okay.
Yeah, I think those were the questions I was stuck on for learning Unit 5, yeah.
Yeah, they are quite tricky because there's a lot of rules here. Like, see, I have to apply this medical rule. Okay, I don't think this medical rule specifically was in the past paper. I didn't see that times 4 bit. Oh, but remember, that might be new legislation.
Yeah,
that might not have been applicable back in 2016. Okay, when they wrote the paper.
Yeah.
Okay, so it is difficult to look at old past papers because, as I said, if I open up October, November 2016, October, November 2016 is using the 2016 tax year.
They actually put up the mid-year exams that were for tax.
That's good.
Yeah, so I'll send them to you later.
Yeah, send me those ones because those ones will use the right tax tables.
Yeah, I think that'll be better. Yeah.
Yeah, because if we do 2016, we're actually using the old tax tables.
So yeah, last year's.
Yeah, and the legislation might have changed, especially for medical. Yeah, a lot of things have changed, and even like the pension also changed. Okay, because see here I don't see anything about that 4 times 4 story. I'm just checking again in the paper. Yeah, see I don't see it. The only thing they have here in the medical is this bit over here, the medical aid tax credits. That's all they gave me here. This is fringe benefits and then the tax tables. Yeah. Okay, so it would be better to try do the 2017 paper. So let's rather do those two when we finish all the theory and you've covered all of that.
There's quite a few there. I think there's like 2 or 3 that they've updated.
Yeah, there should be 2 papers because last semester there was a problem with the date. So UNISA actually gave students 2 different dates. So there should be a paper 1 and a paper 2.
Okay.
Okay. All right, Dershan, you okay for today?
Yes, yeah, thanks, Anthony.
Okay, no problem. Yeah, so at least we've covered that question. Yeah, remember, it's very, very, very good to go through the examples in the study guide, because past papers would have taken theory from these sections and they would test it similar to how they've tested it in your study guide.
Yes.
Yeah, so if you go through these questions, that's actually better than going through the examples in the actual study guide. Right, the ones at the end of the textbook are always better.
Yeah.